on what investors really need to know regarding the latest on BP that Brian just broke down. Let's bring in a Bloomberg best, Jason Gammel of Macquarie Securities. Jason covers BP, one of the most accurate forecasters on the oil company, according to Bloomberg data. So, Jason, good to have you back with Matt and myself. Your thoughts on all this BP news today regarding the dividend and the fund?
Well, I think the biggest thing is you removed a lot of uncertainty around liquidity on the company in the shorter term, because a $20 billion trust fund is something that's been talked about for a while across the news services. And if that would have been an upfront payment, which I never expected, but had it been, then that would have been a big liquidity issue, have to raise a lot of debt or sell some assets in the short term. I think what you're essentially doing now is taking that payment that would have flown out to shareholders in the form of dividends, and now you're putting it into the trust fund. So you've got a very steady process that doesn't hurt liquidity whatsoever, kind of keeps your cash whole for the company. I think that's why the stock reacted favorably today.
What about the exposure that BP still has? I mean, how much money could it end up losing? Somebody this morning said that Katrina cost the U.S. economy $130 billion, and that this is going to be worse. And if the president wants them to pay for all of the economic costs, the price tag could obviously be quite high.
That's really the big issue. You still got an unquantifiable liability associated with this. And then, of course, this is just the restitution we're talking about. There's going to be a whole set of fines on top of this under the Clear Water Act. And if there's gross negligence, $4,300 a barrel on what now looks 60,000 barrels a day of oil will be a pretty big price tag. So,
how big do you think that price tag? We were talking about, you know, how high these fines could go. What do you think?
Well,
is a real number?
If you want to look at the silly math, it's 60,000 barrels a day. Let's say it's for 100 days, and there's gross negligence that is assessed at $4,300 a barrel. That can get you $22–23 billion. So it can be a pretty big number.
On that alone?
Just on the fines. That's not our estimate, by the way. That's just the very high end of the range that we're looking at right now.
You still have a neutral rating on the company. Why?
The amount of equity that has been taken out of the market over the course of the last 2 months is above and beyond most of the cases that we can come up with on what this is going to cost BP. So from the standpoint of selling the stock here, we think that it can be a value stock over a longer period of time. But we're not aggressive on the stock simply because I think that the news flow is still going to prevent the stock from really doing too much to the upside here. You've got some reaction today to closing some uncertainty. There's still a lot of uncertainty out there, though, and we expect it to be a high volatility stock and have a hard time outperforming in the energy space, where we actually see great value out there right now. We'd rather own Chevron. We'd rather own Occidental. I think Matt on the last segment mentioned Anadarko. If you want to look at a stock that is exposed to the Macondo that's gotten hit really hard, we think there's just a lot less uncertainty that's associated with Anadarko stock here.
It's interesting. You've seen almost $100 billion go away from this stock. And we were talking to John Bryn-Yulfson in the last segment. He said he thinks the price could double. And he's obviously not an analyst, but he's invested in BP in some way. He didn't want to specify. What do you think we could see happen with the price over the next couple of years?
Well, our target price is 5 British pounds, which is about 48% upside from where it's at today. So the implicit assumption here is we think it can probably gain 48% from where it's at today over the course of the next 12 to 18 months. But there is going to be a lot of volatility in the interim period. So we would be looking for potentially, as uncertainty is resolved, the stock to move up significantly. We don't have a double on it necessarily, but a lot of value here. I just think there's a lot of headwind in the meantime.
You're saying it's a speculative buy for investors that have a strong risk appetite and a strong stomach.
Yeah, I wish I had put it so succinctly. It's a deep value play here, and if you got a strong stomach and can wait 24 months, there's a lot of value potential.
Can we rule something out like a prepackaged bankruptcy for this company or some kind of bankruptcy down the road?
We don't think that's going to be necessary any time in the short term here.
In the short term?
Well, assessing this uncertainty, again, it's unquantifiable right now. You can raise scenarios where you might need to seek protection in one form or another. Really more political action, though, I think, than anything else. We think that this company is more than capable of making full restitution for what's going on the Gulf Coast right now and still be a surviving entity that really maintains a business presence in the United States.
I'm just curious, though. Do you think BP would have cut its dividend without all this political pressure?
No, I don't. I think that they were financially capable of paying the dividend and funding restitution into an escrow account or just paying it out directly. We think that they were more than financially capable. I think this is a reaction to the political pressure that you've seen on the company.
What do you think about the strategy? I mean, they could have cut and run, they could have fought, and it looks like, with the exception of the slip, Karl-Henrik Svanberg saying small people, probably a language thing, it looks like they've really embraced the administration here. They're kowtowing to the president as much as they can.
25% of BP's production comes to the United States. They need to be here long term. The president should want them to be here long term because a strong company is much more able to fund the restitution obligation. I think that they're trying to meet the president halfway here. And they didn't have to do an escrow fund. They didn't have to cut the dividend. They've made some steps to start some reconciliation. So hopefully the political pressure comes down.
Got a few seconds. If they're found legally negligent, does that make it even more than, the claims then could go, what, sky high?
The fines would essentially quadruple. You go from $1,100 a barrel to $4,300.
Big difference.
And then they become solely liable at that point. So Anadarko's off the hook and Mitsui's off the hook at that point.
Tony Hayward safe?
We think he's going to be in place for a while here. We think he's going to manage at least through the crisis, and he still has the support of the board. So, yeah, I think he's safe.
Jason, thank you so much. Jason Gammel from Macquarie Securities.